This is our Forex trading blog for July 13th, 2012. And like we do most days, we want to buy the strongest currencies versus the weakest and sell the weakest versus the strong. Our three-step easy Forex system uses this currency meter as the first step. The histogram on the top represents 5 of our best statistical tools. It's a real-time strength or weakness of each currency. Some days you have currencies that trend up or down all day long, like you can see happened yesterday in the yen. Very easy to trade those days. Other days, the market shows a little bit of weakness, then an hour of strength, then an hour of weakness, then an hour of strength. Obviously, those days are much harder to trade for everybody, including users of our software. Underneath the real-time trend, which again is made up of 5 different tools, 3 of them measure direction, 2 measure intensity of direction. We have the 15-minute trend, hourly trend, daily, weekly, and monthly. So you got to decide what kind of trader you are. We're mostly short-term traders that are looking anywhere from 10 to 50 pip moves most times, and we're looking to get into a strong trend on a pullback or a sideways rectangle pattern. The market goes up, goes sideways, breaks out, we get in. Or I prefer it goes up, has a small pullback, pauses near preferably a strong support area, and then it doesn't go underneath that support area, and when it starts going back up, we get back in. And we expect it to go through the high and to make a higher high and use our fib target or our trailing stop to get out. And our goal with every trade is to make more on this trade than we're risking. Most of the time, because we use range charts, we're risking 6 to 12 pips max per trade. So, we're looking for 15 to 25, 30 pips on winning trades. So the first step again is to use a currency meter. Today you can see the New Zealand was quite strong. The Australian, especially later in the day, was quite strong. The daily trend shifted up, the weekly trend shifted up. And the yen was one of the weaker ones, as was the dollar. You can see the daily trend of the dollar was down way before that of the yen. So, looking for Australian dollar buys makes sense, especially after 8:30. So let's bring up the Australian dollar. And you can see that this currency was above the hourly moving average in the middle the whole day. And our upper containment bands, especially the white one, is usually the maximum move the price goes. And it can go above the white band, but usually reverses. So you can see, trading this today, you had a buy signal here. It went up a little bit. This one here failed. This one here went up a little bit. This one here failed. And when it finally broke out with this narrow range pattern right here, it found support at the 20-day moving average. It was underneath it. When you're underneath a support resistance area like this, it's a resistance area. There's selling there. Once it breaks above there and proves that it can't get back down underneath there, it becomes support. So buying the breakout right here, this little narrow range pattern, very high probability trade, and you can see it went from 73 all the way up to the Fibonacci area. I spend 30 or 40 minutes every night drawing fibs on my longer term charts, and then they show up on your chart, so you don't have to do that kind of analysis each day. And also, as you notice the tiny swings up and down, notice statistically comparing all the Australian pairs and all the dollar pairs, on up moves there was much more intensity than there was strength, weakness on the way down. Almost a 2-to-1 margin when you look at it visually. That's a very big sign that the move is going to happen to the upside. I would prefer this pattern to have a weekly trend that's also up, but occasionally, the different time frame trends are against each other, and the tiebreaker is what's going on real time and where the price is. If it's right near the hourly moving average, it tends to act as support. There's not many people that are professionals that sell this close to the hourly. They want to see if it comes down. If it breaks the hourly, then they sell. So when you're above the hourly, it's more likely to go up. When you're underneath, it's more likely to go down. And you can see this big move right here. Now the yen was also weak during that time. Not as many time frame trends line up on this. The daily trend was still for the most part up, although just barely at that time. But when the Australian was that strong, you can still look for buys. This one was above the hourly all day, and especially at 8:30 when the yen and the dollar became weak, you have a nice little sideways rectangle right here and went up about 20 pips. You got a little bit of a pullback and went up another 20 pips. But the yen was not as high of an odds trade as the Australian dollar. Now, New Zealand was also quite strong most of the day, and so trading that against a weak dollar also makes sense. And you can see, when it comes down to the hourly right here, very good area of support, and it goes up. Most of the time frames are up. The only thing that would have concerned me on this one is when it came down right here, it had quite a bit of weakness, but only on one bar. As it's going sideways right here, the weakness disappears. It did find support at the hourly, and so when it breaks out over that high, you get in this trade, and that last one, shot up 40 pips. Today was a lot harder to trade than, a lot of days that were, especially yesterday when the trends were up all day long. You really could not have gone wrong yesterday by buying the dollar and buying the yen all day versus, the weakest pairs, the pound, especially during the U.S. session, and some other ones. Today, another strong one is the pound. You can see the 15-minute and hourly trend was quite strong. The real-time trend, especially when you see a lot of strength followed by little weakness, that strength's likely to come back, and it's even more likely to come back when most of the time frames are up. I don't care much at all about the monthly trend, but I just put it on the charts. I mainly care about the real-time. 15-minute and hourly is very strong. That's enough for me to trade right there, even if the daily, weekly, monthly are down, which in this case they're not. So 7:30, you're looking for pound dollar buys. So here's 7:30 right here. I prefer to wait for a little bit of a pullback first. You start to get one right here, small profit, a deeper pullback. You have two buy signals right here. If you want to wait for the trailing stop to get triggered first before you get in, you're in here at 70, and it went all the way up to 26. That's a 56 pip move. And if you look at it, as this is above the hourly right here, the majority of the moves are much stronger up than they are down, with the exception of this right here. You don't know if this trend's over right here until the market goes up with a little bit less strength and weakness, but then it comes down again with almost no weakness. Anytime you see buy signals with a decreasing weakness, it's a much higher probability trade. You get in that trade, I basically would have bought it right here when it went 1 pip above this bar's high at 68. Draw your fibs off the last wave up, and that's an excellent profit target. Look, it's exactly where it went. And most times, the green 3.0 band is the maximum. At this point and above, you can usually scale into some counter trend trades with very high probabilities. Let's take a look at this one versus the pound yen. This is yesterday's. I'm going to scroll over to today. You can see a very similar looking pattern. It went from underneath to above the hourly and found support there, found support here. Most of the upward moves are much stronger than the downward moves. And this is a good example of why, the daily, weekly, monthly trend are certainly nice to have on your chart, but it's much better to follow the real-time trend, especially when you have a lot of strength on the way up, very little weakness on the way down. And one of the tools we're going to release soon, will become apparent in a second why, is the Fisher oscillator. And I'm probably going to release the one that just has one color on there. But it lets you know when the market's pulled back enough. And it also lets you see divergence patterns that tend to oftentimes predict new trend moves. For example, this one made a nice size move up and it pulled back. You got a buy signal right here, but the market has not pulled back enough. When it comes down to the minus 2.5 area right here, it has pulled back enough, and you can see it really never went any lower than that. So that's a good way to make you have the patience, force you to have patience. Too many traders lose money because they do not have patience, and it's critical. You can see it went up again. We have two buy signals right here, and when this flipped to green, you get in, and it was actually a somewhat leading indicator in this example right here. And you can see the next bar broke out, and it went up from 60 all the way up to 07. Nice 47 pip move. And again, pull back, but you have a buy signal right here. It hasn't really quite come down enough. I haven't put this code into the trend trading method yet, but I plan to, because it does oftentimes get into trades at a much more advantageous price. Notice when it hits the minus 2.5, it's oversold right here. If you have a buy signal before and this has made enough of a pullback, as soon as it starts going up, you can wait for the trailing stop to get hit if you want to be a little bit more safe. In at 83, out here at 12, for a nice 30 pip move. And again, most of the time when the market hits the upper white band, it's kind of run out of steam. And that's why I rarely have buy signals above the containment bands, because the chances of it going up 30 pips are much lower than the chances of it coming down 30 pips. One last thing before I show this, or end today's blog. Anytime you have a lower low than a previous low, this is slightly lower, but the indicator value is slightly higher, or in this case higher. It's got a higher low than before. That's a great reversal pattern, and you can see it shot up. That was the ultimate end of that down move.